Hi, welcome to the Japan Stock Data Tracker. Today, we have a highly anticipated explainer lined up for you, and we are focusing entirely on one specific powerhouse that has absolutely captivated the market, Kioxia, ticker 285A. If you've been watching Japanese equities, you already know Kioxia has been on an absolute tear lately. But here's the catch. For the vast majority of everyday market watchers, seeing this historic run has actually been pretty frustrating. Why? Because right now there's a literal structural wall keeping retail investors completely locked out. So in this explainer, we're going to break down exactly what that barrier is, and more importantly, the massive breakthrough the company is planning to finally tear it down.
Here's our quick roadmap for today. Number 1, Kioxia stock split. And number 2, the upcoming US ADR listing.
All right, let's jump right into part 1, Kioxia's stock split and how they are breaking the price barrier.
So we really have to talk about the massive friction point facing everyday investors right now. Look, when a company sees the kind of explosive, parabolic growth that Kioxia has had over the last year, the share price naturally balloons, right? And while that's fantastic if you're an institutional fund who got in early, it creates a massive mechanical headache for everyone else. Because Kioxia's stock has surged past 100,000 JPY per individual share, and because Japanese equities strictly mandate trading in 100-share minimum lots, well, do the math. It currently takes a staggering 10 million JPY just to open the absolute minimum position. Think about that for a second. To buy just one single unit of Kioxia stock, you literally need the equivalent of a luxury car budget sitting entirely in liquid cash in your brokerage account. For the average person, that's not just a hurdle, that is an insurmountable brick wall. The reality on the ground is that normal retail investors are just completely priced out of holding actual shares of this AI memory giant. Hedge funds, institutions, the ultra-wealthy, sure, they can easily allocate millions, but everyday investors are just forced to sit on the sidelines. You can read the news, you can watch the charts go completely parabolic, but you literally cannot participate in the equity upside of one of the most critical hardware providers on the planet right now. It creates this extreme exclusivity, and frankly, that's something modern tech companies generally want to avoid. And this perfectly illustrates why it's so frustrating. The stock has skyrocketed, multiplying its value 49 times over since just last August. 49 times. Imagine watching an asset run from around 2,200 JPY all the way past that 100,000 JPY mark, knowing you couldn't buy in simply because of a 100-share lot rule. And this growth is for sure no fluke. It's being heavily fueled by unprecedented demand for advanced memory products from US hyperscalers. As the whole world rapidly pivots to complex agent AI and physical AI applications, the need for high-capacity memory in data centers has just exploded, and Kioxia is sitting right at the center of it all. Knowing all those strong fundamentals just makes the inability to invest even more agonizing.
But here is where things get really exciting. Leadership actually tackled this head-on at their recent shareholder meeting, confirming that a breakthrough is imminent. Vice President Kawamura openly acknowledged the issue, stating they plan to, quote, split to achieve an appropriate price and allow more investors to purchase, end quote. And then he added the golden words everyone was waiting for. We think we can announce it soon. That is a massive signal. It proves Kioxia's executives aren't just aware of the retail lockout, they are actively taking the administrative steps to fix it.
So let's look at how this actually plays out. A stock split is going to absolutely shatter that 10 million JPY barrier. We're talking about transforming a totally exclusive asset into a massive, highly accessible retail opportunity. When this split happens, the price per individual share drops proportionally, meaning that 100-share minimum lot suddenly becomes totally affordable. The fundamentals of the company don't change at all. It's like slicing the same pie into smaller, more digestible pieces. But the psychological and liquidity impacts, huge. By moving away from a stock restricted to just institutions, Kioxia is about to unlock a massive floodgate of retail capital that's been patiently waiting for a way in.
Which brings us to part 2, the US ADR listing and the global expansion.
Because while the stock split democratizes access domestically in Japan, Kioxia isn't stopping there. To really capitalize on being an AI hardware leader, they need to tap into the largest pool of capital in the world, and they do that through an ADR, or American Depository Receipt. If you don't trade across borders often, an ADR is essentially a negotiable certificate issued by a U.S. bank that represents shares of a foreign stock. Word is, Kioxia is eyeing an ADR listing in the U.S. right around the beginning of the fiscal year. This mechanism lets American investors buy and sell Kioxia on a U.S. exchange in U.S. dollars during regular U.S. market hours, just like buying any domestic tech stock. It completely wipes out the friction of currency exchanges and complicated foreign accounts.
This is a brilliant strategic move.
By targeting the beginning of the fiscal year, they get this perfect window to execute a 1-2 punch. First, you split the stock so the nominal price is affordable. Then, you package those newly accessible shares into ADRs and offer them straight to the U.S. retail and institutional markets. The goal here is simple but powerful: attract massive global investment, drastically increase liquidity, and provide true global retail market access. They're opening the doors to a whole new universe of buyers who are incredibly hungry for AI-adjacent hardware plays.
So with these two monumental catalysts about to turn a completely inaccessible stock into a global phenomenon, the real question is, how will you position yourself for the future of retail investing in Japanese tech? We've seen how the surge in AI has already propelled Kioxia's value 49 times over, and we now know exactly how the upcoming stock split and US ADR listing will finally demolish that 10 million JPY barrier. The executives are signaling the announcement is coming soon. The pieces are all falling into place. Are you ready to analyze this opportunity once the gates are finally thrown open? Thanks for joining me on this explainer, and definitely keep your eyes peeled for that official announcement.